Welcome back. And while the commodity markets have seen a lot of follow-through selling from the previous week, it is the crude oil prices which have continued to decline even more. We have seen nearly 19% of a decline in the past 1 month itself for the crude prices. So at these multi-month lows, where do we stand and what are the cues from here? For that discussion, I am joined by Peter McGuire from XM Australia. Peter, hi. Very sharp declines is what we saw in the previous week, the worst weekly decline in many months. And we've started some more follow-through selling today. We've seen a break of 68 on the weaker side as well. What is your sense on where are we heading now?
Well, good afternoon, Manisha. Yeah, it seems to be just as we normally go through this August period, I would have thought that it may have held, but unfortunately, I think from a trader's perspective, a lot of the hot wind and it was certainly exhausted to the upside. It's got spanked down. Inflation's a problem. Also, of course, demand destruction with the COVID numbers and Delta variant. All of these moving in, and talk, of course, as far as US dollar strength, Manisha. So the crude market's really taken a big spank off, and certainly did today as well with that solid push down with gold.
Well, sure is the case, because the OPEC production has been increasing. We've seen the U.S. non-farm payroll data come in on the positive side. The COVID cases are rising in U.S. and China, and the demand recovery is not so even. So there are a lot of factors which are impacting crude prices right now. But how much down further do you see the crude prices could be taking support at?
Well, there could be another couple of bucks. I mean, it might be another $1 or $2. It's hard to say, but I think it's taken the market by surprise where we're sitting at the moment. We've got West Texas Intermediate, that 66, 67 sort of handle, Manisha. So that's really showing and demonstrating to the market that there's, I think, more structural weakness in the price of crude. You've got Brent now well and truly just about to go through 69, so it'll be in the $68 within the next matter of a couple of minutes, I'd say. So, again, that continuation, that softness. There's not a lot of data coming out this week. I'm worried about where the US goes as far as those inflation numbers and whether the Fed's prepared to move earlier than later as far as pulling taper off the table, Manisha. So there's a lot of big themes that are, it's like an orchestra at the moment. There's all the wind instruments, everything's working together, and it seems to be pulling it down.
While yes, it perhaps is still a sell on crude prices, as you said, a couple of dollars down from here is not ruled out. But natural gas, I mean, that seems to be really getting bought every single day. Are you a bull there?
Oh, well, it just astounds me. We've been talking about that for 10 or 15 years together, and it's just such a wild market. Boy, oh boy, I mean, it's at $4.16. I can't believe what we've experienced. It's been really one-way traffic since, those lows that we saw in the start of April, and it's just gone boom to the upside. It's nearly double, Manisha. So, yeah, I suppose there's more. It's hard to get in the way of a couple of things on that. As you know, you've got animal feed, you've got certainly gas-fired power plants, you've got all the sources in the sense of a hot summer, so demand as far as electricity and air conditioning and all of those concerned. So I wouldn't be surprised to see nat gas to probably go up further from here. I'll even go out that it might be a $4.30 handle. So it's currently at about $4.17, Manisha.
Peter, you follow the currency markets very, very closely. Would you say that the markets are really turning towards currency now? Because we're looking at 4-month highs on the US dollar, the euro, the Swiss franc, the Japanese yen, the emerging market currencies, all of that are slightly on the weaker side. That is impacting commodities also. How much of a pressure do you see coming from currencies, and any targets you're putting there?
Well, we've got that US dollar index at a high today at 92.92. That was a couple of hours ago, Manisha. So, and really, it's just been, again, the taper talks. Is the Fed prepared to move earlier than later? So that's going to put, I think, an upward grind for US dollar index. You know as well as I do, the other side of the story, Manisha, is that there's a divergence between the haves and the have-nots. The haves are the central banks that will look at probably raising rates. New Zealand, I don't know whether Australia will, but certainly the likes of US and so on. Then you've got the have-nots, Japan, Eurozone. So there's the storyline. So I think that's really going to accelerate over the lead up to Christmas, Manisha, as far as further softness for currencies and further strength for that US dollar.
Yeah. Okay. All right, Manisha as well as Peter. Thanks very much for taking.
Thank you.